My name is Milo Hamilton. I'm senior economist at Firstgrain, and I work out of Boston. I have customers all the way from farmers to countries. Asian countries take my service, internationals, exchanges, all that kind of stuff. But I love being with farmers. I got into business because of farmers. I bought from 800 farmers when I worked for Uncle Ben's for 18 years, bought $100 million worth of rice, and had 11 buyers. Excuse me, I just have to improve my voice a little bit. Welcome here today, and I appreciate your time. It's a small audience. Usually this thing's really crowded. I think people have given up on the market. They're just trying to reduce their costs, and you can reduce your costs, but you need to know whether the market has a future to it. Right now, it doesn't have a future. The ag prices are really down hard. But what I'm about to tell you is that the tide and the weather and the season of rice is changing, and I want to show you why I think it's changing, and it's based upon data, not my own mental constructs. I just want to say that the essence of our business is timing. We help people that are busy doing other things time themselves in the market, and we watch a number of geographies and a number of market factors, and I appreciate your talk, Winston. And he's seen The Darkest Hour. Has anybody seen the movie Darkest Hour with Winston Churchill? There you go. His name is Winston. There was a movie about Milo. I'd probably go see it. I think there's a Milo and Otis, wasn't there? Something? Yeah. Not very significant, but that's all I have. That's grass. These are the things we watch, and we do it in a systematic manner. I'm going to go through it very quickly. These are things that most of you don't think about. My customers think about it because we think about it, and that is the world. There's three geographies. Asia, the market's strong. It's not weak, it's strong. Back in 2016, when the price crashed down to $9, the Asian price was weak. There's reasons why it's strong, and I'll try and point them out to you. The market is going up. Strong means the market's going up for rice out there. South America, it's kind of dodgy. The market's kind of dodging around. It's coming into harvest. The acreage down 10%. They're not going to destroy our market. They may shoot at it a bit when they get it harvested in March and April. North America, we still have a super tight carryout. Despite all the bearish ideas about new crop acreage, old crop is tight as a squeaking screw. I don't know if that works. And the thing to keep in mind as everyone gets bearish about acreage is, what is the support price under the market? The support price is Asia. It's not Brazil, it's not the US, it's Asia. So if Asia's at $350, then we go to $9. If Asia's at $500, we ain't going to $9. We're moving up, not down in the Asian market. It is the one underneath the market, and we can't talk about the price of rice in Arkansas. We can talk about the spread between Arkansas and Asia. That's all you need to worry about. And it could get very tight if we have, say, more like 1.6 million acres in Arkansas. The long grain acreage in Arkansas will determine the price of long grain this fall. Okay. Going to move fairly fast. There's 7 market factors. Asian weather, okay, except for one thing, cold weather. I don't know if you've noticed, but it's been cold here recently. I'm going to talk about that. We're not sure if this is part of what I'm talking about. It could be part of what's coming. Balance sheet, very tight in the US. Trend of the dollar's down. I've said it was down since January of 2016, so my people know it's down. If the price of the dollar goes down, our export offer at the Gulf goes up relative to the rest of the world. A weak dollar is good for people that sell grain. Been going down since January. I think it's got a big dip ahead. That's not negative on the grain prices out of the Gulf. Price of spongy and acreage down, spec position very low. The specs can't figure out what to do with it. They're so bearish on grains they can't stand it. I'll show you why. They want to short everything that has an ag in front of it, okay? That's what Wall Street wants to do. Somewhere between 1.3, if it's 1.3, we've got a bit of a better situation. If it's 1.6, it's going to be a lot of rice, more than demand. Just like we had in 2016. And basis, okay? There's 2 things that I help my customers with. One is the direction of price and when to sell, percent to sell, and the other is what to do with the basis. In Texas, I live in Texas, we don't have a basis market, the difference between cash and futures, because the price never changes. That's good. Because when the price of futures go way down, you get out of futures and you get out of cash and you get into futures, okay? So there's always a basis everywhere. About 30% of all the rice in Texas, my company, Uncle Ben's, used basis trading in Texas extensively when there was only 1,000 lots on the exchange. Sometimes that'd be half the open interest in the market. Okay, there's three things I'm going to talk about. Turning points in the world market that affect us. There's a lot of turning points going on. There may be a collapse in NAFTA this summer. That's a turning point. That's bearish. But the turning points that matter to rice is all I'm looking at here. And then from there, I will go to the long term and then what's happening right now. Okay? So we'll go turning points in the world market in economy. The second one is what's happening here in the long term in rice trends. And the last is what to do now over the next 60 days. Corn yields are gaining on rice. Commodities to gain on equities. Not ag commodities, but crude oil, metals, everything else is going up. Ag is always the last to catch up. Everybody else catches on in these turnarounds in world commodities. We're in a major primary turnaround in commodities, my hypothesis. That means we got 8 to 9 years of very good prices in metals and energy, and yes, in ag as well. Colder climate ahead, question. This is a ratio of equities to commodities. Commodities are down at the bottom of the barrel. That's why nobody came today. Because everybody thinks it's going to stay there, and they're going to sit there and drink their whiskey and jump out of one-story wheel building. Okay? Don't do it. You guys that are here and you ladies that are here, don't do that. Hi, Jessica. Thank you. We don't like the price, but it's pretty high relative to ag. Ag is going down, down, down. It keeps going down, down, down. And that's corn, beans, wheat, cotton, not so much cotton, but cocoa and all these other things are going down. And if you're a self-respecting hedge fund, you're short. You just go short anything with ag on it. Didn't work out so well because the market went up because we were short on acreage. This red is the price of rice. This is the price of all the other ag commodities in the world right now. I'm going to explain to you why our prices are higher. I'm going to explain to you why these prices are so low. I am not a bull. Someone said, Milo, talk to him and he's a bull. Not a bull. But I want to know when to be bullish. So I'm watching the metrics. I bought a lot of rice and I never try and anticipate the market. I try and see what's going to happen and then I decide what to do. We're coming up against something that could be a cataclysmic change in the commodity markets up ahead, to include little green things like agriculture. This is a chart of the world of corn and the world of rice. And the world of corn is producing a yield that's 30% higher than rice globally. And this is called a breakout momentum type thing. And we could see the corn yields around the world at 50% higher than rice because we don't have any GMO. It's been banned. So we don't have any choice but to sit and stare at it. We get a little bit of increase thanks to our good people in the university system, but it's not like corn. They can grow corn now in central Canada and do very well, thank you. At some point, either the politicians have to shove more money at rice farmers or people are going to get out of rice on the margin. Okay, here's a concept that is sustainability. Tim Walker talked about it, but it's this about the sustainability of the world. We have a problem in this country, got an awful problem in some countries, and not so bad in others. It's a problem of this stuff. Water. I put a little table together and run through it very quickly. This is what's considered high per capita resources of water. This is low, and this is unbelievably low. In other words, they're not going to last 20 years without major restructuring. The most superabundant water is in Brazil, and as a percent of Brazil, Uruguay is even higher than you start going down when you get down into China, India, and Pakistan. India and Pakistan export about 16 million metric tons of rice, which is really interesting. Up here, in here, you've got low water country. We have a problem. You listen to all the researchers. We've got a water problem. We need to get back to where we're putting more in than taking out in the delta. But we can do it. There's a technology to do it, and the farmers to do it, and we'll last maybe 150 years before we get into a problem. 3 million cubic meters per year. If you get below this level here at 6, you go to 2 or 1, they don't have any water left. There's one country that's doing something about it, and that's China. For all I know, they're going to go alternate wet dry before we die. But China is trying to do something about it. And it can do something about it because it's like constructed from Beijing. Its power is in Beijing. It's not with the people. It's not a democracy. These are two democracies. And the reason why they are winding down on what little water is left is because politicians want to get into office. And the voters are farmers, unlike this country. And they vote them into office if they leave their water alone and let them do whatever they want. The purpose of a politician is to get reelected, not to be a statesman. I'm sorry, but that's true. If you don't, anybody not believe that? They believe it's virtue and goodwill and I don't know what all. Yeah, anyway. I believe it's to get reelected. But in China, there are no elections. Xi just voted himself back in as the head of China for another few years. High, low, jack of the game. Those people are going to get into problems, big problems. And every academic over there, just like here, is saying, we got water problems. Over here, we got water problems. Over there, they're saying, holy cow, we really have water problems. Does anybody listen? No one's listening. There's no money in it. So here's the problem. The reason why our price is so low is because India's exporting rice, China's importing rice, but India's exporting more rice than China's importing. So the market is bearish. It's under tremendous pressure, okay? In order for India to do that, they've had to go and really run up their groundwater usage, as in pump it up. This was a chart from the Economist. All the other countries are trying to, they have seminars just like we do, and experts come out and people like Mike Sullivan say, we've got to do something about our water and I'm trying to change it. But not in India. It's a tragedy just waiting for it to happen. When will it happen? 5 years, 10 years? I don't know. But the press says one thing, the academics say one thing, and their activity says something else. We've got law of prices. It's a bear market. It's been a bear market since 2008. These are deflated for inflation. You've got downtrends. This is downtrend number 2. This is downtrend number 1. In my service, I started up here. When I went through that downtrend, I told my friends to sell slowly. This year, I'm saying sell quickly. Huh? What is it? That's the price of rice. What will happen to it if India withdraws? India withdrew here. They banned the export of rice and it went to $1,000 for one reason. India got They didn't export any rice. Instead of exporting 7 million, they exported 0. Here's a little thing to think about. It's called the Dalton minimum. Has anyone heard about sunspots or the Dalton minimum or anything? I figured not. It's not in the press. All that's in the press is Al Gore and global warming. Was it cold today? Is it going to get cold tonight? Has it been cold on the East Coast and in D.C.? Yes. Is that related to what I'm about to tell you? I'm not sure. This is not based upon me. I have 4 top world climatologists and meteorologists I work with that work for a living. They're not trying to produce papers. They're trying to survive with their clients. They say that we're moving into this period here. It's hard to see because this is over here. The reason why it went up was that we had very cold weather, and we had more earthquakes and volcanoes, more seismic activity. People didn't have any money. 90% of their expenditures were on food, so when the price went up, they just literally starved to death. It started in 1780 and lasted till 1820. That word Dalton minimum is going to be in the press in the next few years. That much I predict. And that is that we had a year where, when George Washington was getting into office, East River froze, the Thames River froze. We haven't had anything even remotely like this until now. And what you do is you count off the sunspots. And I'm going to show you that China has huge stocks of rice, and I think maybe the reason is they're concerned about this phenomenon. China is like ancient Egypt with Joseph. If Joseph wanted to do something, they could do it. And the Pharaoh said, hold rice. And they hold wheat, and they held wheat. And then came the bad years. We don't have anything like that, but China maybe approximate that. Maybe they've got someone named Joseph over there. I don't know. We've got the tracking here. When it gets down to 0 sunspots, then we get into an extremely cold climate. I can't get my guys to say whether this shock wave of record cold is related or not. So they're very conservative, most meteorologists are. And from here until maybe not 2030, we're going to have the most volatile period for grain prices in our lifetimes and in the lifetimes of our great-grandfathers. It's called a Dalton minimum 2. And it stretches on out there, and there are no sunspots. When the sunspots are down, the cosmic rays pick up, and the skies get covered. And when the skies are covered, it's awfully hard to grow things. The worst part of rice is cold wet, right? You don't want to get extremely cold and extremely wet. Okay, very quickly, and then I will wrap it up. This is a statistic known as stocks to use. The stocks to use went down here, they bottomed out, and when I started getting bullish on the market and the price went up, these are stocks to use, outside and inside of China. So they went up, they got very high, and then the price went down, and the stocks went down everywhere but in China. This is the Joseph factor, Joseph in Egypt factor. We have rice reportedly going up for 11 years, stocks in China. We don't know whether they're there or not. I tell people, China is like Las Vegas. Whatever happens in Las Vegas stays in Las Vegas. So we don't know what the truth is of what they talk about. If you believe the Beijing government, you get what you deserve. There's no one from Beijing here, is there? Okay. I think those statistics are bogus, but it doesn't matter. China's got $18 rice. Who could make money at $18 rice here? Surely somebody could make money. China has $18 rice. China's importing rice, probably 30% more than they're admitting to. And they're bearish because they're doing stocks. The stocks are going up. So what Beijing says is, full silos make for a stable world market price. Yes, and it buries the West, because the West is a cash market, and that's why you guys are in bad shape, because China is saying they've got big stocks, and India is actually exporting large amounts of rice. Unfortunately, because the dollar's going up, dollar's going down in the US, the rupee and all these other currencies are going up, so even though they're exporting the rice, they're becoming uncompetitive relative to our Gulf Coast. So if nothing else, if the dollar does what I think it's going to do, down about 12% the next year, we're going to knock them dead.
We're going to what?
What?
What did you say? We're going to do what?
Knock them dead.
Okay.
That means we're going to export a little rice.
Why?
Okay, here over here. This is when stocks to use, stocks to trade. So forget about stocks to use. As an economist, I only worry about the amount of exportable supply relative to world trade. What's been happening is that over the last 30 years, world trade's been going straight up, and stocks go up and down with the price. Every time it gets to a low here, the market doubles or triples. Every freaking time except one in here. And you know why I didn't do it that year? The reason to do it in that year was because we had a nuclear collapse in the Asian economies, and the dollar went very high. So whatever you want to say about demand and supply, make sure that you've got the dollar right, okay? The dollar is the key to this market. Then comes demand and supply. One time it hasn't worked. That's why I love this indicator, because one time it just didn't work. Right now, it's back to the same thing. About the lowest stocks to trade in exporter hands in 56, 7 years. I take that factor and I say, we're on the edge of a move up. How will we know this is real price of rice? When that happens, when these two downtrends I showed you earlier start happening. We got little rallies in the real price. It was more in the actual price, I'll show you. And all those points were where the market went up. So we had 1, 2, 3, 4. I've lived here in the market with just 1, 2 here. I caught both of those. Worked for Uncle Ben's and then with my customers since I started my company. They happen very infrequently. And there was a 47-year downtrend in price. Why would the price go lower if yields are stable? It's because the subsidies in Asia for rice continue to mushroom. In China, they spent $256 billion a year subsidizing wheat and rice. $256 billion. That's more than our food stamp program. No price reversal yet. I'm not a bull. No price reversal yet. If you walk out of here and say Milo's a bull, you're wrong. But I am a watcher. And I watched this one here. I watched this one here for Uncle Ben's. I caught both. I caught that one, made millions for Uncle Ben's. And then when I started, I got my people in on that one. And now we have one here. It's about 17 years later, something like that. I like the long-term signals, but I do more than that. I'm going to talk the short-term also. So you want to watch that amber arrow when it occurs. If this goes up, goes to about 1450, you want to look closely and see if there's follow-through in Asia. Okay? Now, very quickly, going to it, we are way below normal long-range stocks. We've got a very tight market. Watch this one here. I think this market's going to go higher. that we're looking at right now. If you haven't sold any of the rice, do it. You look out in Asia, the lows come in October, boring. The highs come in July, boring. And the trend is up. When the low to low in Asia, the next major low is higher than the previous low. That's an uptrend. We've had 2 years higher lows and higher highs. And that would suggest the market's going to $500, which is the export offer right now at $12 futures, more or less. Okay. So at harvest, instead of being down here, our support price, which is Asia, is right up against the nostrils of the futures market. Okay. Are we going to go higher? This is being laid upon by the hedge funds out of New York City that think rice is a grain, it's got to go down. It's toying around in the gap area here right now. Made a low here, I screamed at my people, buy or hold, and there will be a point where I'll start screaming at them, buy or hold, on the last move until new crop. And if you don't do something about that, if you haven't sold any rice, then heaven help you. But why do I feel that way? Okay, it's a very difficult concept. In 3 minutes, I'm going to try and sum it up. When the dollar is strong, the rice price is weak. I could do weak dollar, strong rice price, or strong dollar, weak rice price. But what I've done is inverted the dollar so it tracks the market. This is an indicator that tracks the market. Nothing I have come upon remotely resembles this indicator as tracking the futures price in Chicago for your favorite commodity. And over here, you had a discrepancy. The dollar was getting weaker, or the inverse was getting higher, and the price collapsed. Buy it! Over here, the dollar starts to strengthen and the price is weak. Buy it! The dollar's getting weaker and the rice price gets weaker. Buy it! Buy the futures market when this indicator is that way until you have a change of trend. We don't have a change of trend. We just have some monkey shines going on here. The receipts are getting ordered out. The commercials can't buy any rice. No freaking farmers are selling. And I hear up in Arkansas, there are places where nobody has any rice, okay? So they're hoping that there will be rice to supply the market. We haven't gotten there yet. There is still rice. I have clients that haven't sold any rice, okay? This is the basis. I've got 1 minute to say this. We watch this. You can pick up 50 cents to the dollar with our watching this. You do not want to sell your rice in Arkansas when the cash is very low to futures. Just hold it. When it gets up even here, and this is not the bid at your local merchant, this is the difference between the Tuesday close and the cash price and futures. So on that Tuesday, someone in Arkansas could sell cash and move into futures. The only reason you hold cash is because the basis is wide. When it gets narrow, the basis comes in, sell your cash. If you're bullish on the market, go long futures. Find a broker, find a banker, and do that. Because you can lose or gain as much as a dollar. So the market goes way up in Chicago and the cash doesn't do anything. That's your fault, not the market. You forgot to sell and transfer your ownership over. It's called transferring from the cash to the futures. A special gift to those people that are willing to take futures position that comes to you. There's two things you need to do. Sell at a good price and sell at a good basis. Those two things. If you don't do those, you're undernourishing your wallet. Does that make sense? I hope it does. Very quickly put, market summary. You've been very patient on a cold afternoon. You are the very few. Sometimes I talk and I can't get in the room. I like a small crowd. I can relate to a small one. Large one, I get very nervous. Jessica, you smiling? Or are you confused? Okay. This is bearish, negative bearish Asian prices right now. They're going up. It was at $1.42, now it's $1.32. It's setting uphill, the difference between Asia and the U.S. The Asian market is a support underneath the U.S. market. You think Arkansas works in a vacuum, it's just part of a grander plan. That's how we approach the market. Okay? U.S. acres up 20, 30%. Up 20, not so bad. Up 30, we go right down to the Asian price. Okay? So I'm not bullish, but I try to be realistic. China's rice stocks, supposed to be record high, 65% of the world, but the price is at $18. You know what's at $18? If they stick it down to $16 and their labor's going up at 16% a year, they won't grow any rice. They'll just buy everything in the world market, and they know it. As their labor costs go up, their support price has to go up, and then they got to put $256 billion to keep that support price defended inside the country. But it leaks in anyway. The stuff leaks in anyway. The two key things you should be left with is that percent stocks in exporter hands is the key to whether the market can go up or not. And right now they're desperately short in the world market on the supply of rice to feed the market, which is where the price is discovered. It's not discovered inside these countries. The second red letter is if there's a dollar bear market. I'm a dollar bear. I think when it breaks through 91, it's going to go down to 80. And when it goes down to 80, the only place to buy rice is at the Gulf Coast, and they'll buy corn, beans, whatever it is, and our price will go up. So watch those two things and all of the stuff I've given you. And the number one thing is the currency value. Demand and supply of an economist means nothing. If you get that currency wrong, you're dead. So far, I've been right since January 2016. Maybe now I'm wrong. I've been right and bearish on the dollar for a year. I'm probably going to eat my words for the next year. That's the way market works. Okay. I don't think so. I got good reason. All this money's coming back in. Nobody understands Trump. The big strong markets were Clinton and Reagan. They understood their policies. No one understands his policies. If you even like Twitter. South America, rice production lower. Okay, it's not bad. Tight basis, okay? Not only can you use the basis to get 50 cents to $1 more, not only can you do that, but in addition to that, you can watch the basis for strength or weakness in the market. So when the basis, the difference between cash and futures is very tight, that means the commercials can't get the rice. And when the receipts get gobbled up like they're being done now, it means no darn farmers are selling. Either they're not selling or the rice isn't there. I believe from our day that we have the lowest rice stocks and long grain probably in 2 decades, at least, in principle. Energy and metals are higher, ags are next. It's classic. It's like, I saw this movie with Cary Grant, and now it's with Tom Cruise, but it's the same damn plot. So, we've got an outlook report in addition to the book. So we got the long-term book, and we've got the current outlook for annual. I can email you a copy for free, and we can give you a copy of my book for free. And if I sign my name on it, then you can go to the Asian Antique Roadshow and sell it and make a bit of mint someday. Thank you all very much. I hope I confused you. I don't think about things other people do, so they pay me for that. Appreciate it.